Global stocks surged to new heights as dollar bolstered by robust U.S. jobs report. In an exciting twist for investors, global stock markets surged to unprecedented levels for the second consecutive day, and the U.S. dollar climbed in value following a surprisingly strong U.S. jobs report. This report, signaling the U.S. job market isn't declining drastically, has caught the attention of investors and analysts alike. Specifically, the number of non-farm payrolls rose by 147,000 jobs in the last month, surpassing the initial estimates by economists. Even after a revised increase of 144,000 jobs in May, this surpasses the originally predicted 110,000, indicating that the employment scenario in the U.S. might be more resilient than anticipated. But here's where the news gets intriguing. These positive employment figures led the Federal Reserve to reconsider its strategy regarding interest rate cuts this year. Previously, a nearly 25% chance of rate cuts had been forecasted. But after the latest data, those expectations significantly diminished, dropping the odds of a September rate cut from nearly 98% to around 75%. According to Nasdaq data, the possibility of a rate cut in July now seems out of reach. And this is the part most people miss. Following the strong labor market report, even Wall Street felt the ripple effect. Key indices, including the S&P 500 and the Nasdaq Composite, marked record-breaking closures driven by a surge in technology stocks. For example, shares of NVIDIA soared by 1.3% as its market capitalization approached the $4 trillion mark. Relevant data also indicated that the U.S. services sector showed signs of improvement in June, with a notable rebound in orders, though employment still contracted for the third time this year. Global stock indices also had a positive week, with the MSCI's worldwide measure up by nearly 0.65%, and the Pan-European Stocks 600 closing up driven by gains in financial stocks. Furthermore, the dollar appreciated following the employment data, prompting some shifts in currency values, like the euro weakening against the dollar. This appreciation follows a series of consecutive days of decline, despite the dollar remaining slightly lower on a weekly scale. For those following interest rates and government bonds, yield on U.S. Treasury notes saw an increase due to the jobs numbers, particularly the 10-year and 2-year notes. While oil prices saw a minor decline, it's important to keep an eye on both the short-term and long-term trend of energy prices. Controversial thought. Do these optimistic figures set the stage for major shift in economic policy? How do you see these developments influencing future investment strategies? Share your thoughts in the comments below.